Welcome to lecture number 22. We'll continue with the concept of incremental analysis. Now we will look at the case study of whether you should sell or process further any product. Many manufacturers have the option of selling products at a given point in the production cycle or continuing to process with the expectation of selling them at a later point at a higher price. So when you are into the business of manufacturing, बहुत से ऐसे products हैं जिनको you can sell them semi finished or you can sell them fully finished. So that is where the utilization of incremental analysis comes. You can judge using the incremental analysis at which point you should sell your product. For example, a bicycle manufacturer such as Trek could sell its bicycles to retailers either unassembled or assembled. Furniture manufacturers such as Ethan Allen could sell its dining room sets to furniture stores either unfinished or finished. So we will look at this is the key when we are dealing with these to sell or process further. Process further as long as the incremental revenue from such processing exceeds the incremental processing cost. It means that you should process as long as your marginal revenue from processing further will be more than the marginal cost from processing further. Now we look at the example of single product case. Assume, for example, that Woodmasters makes tables. It sells unfinished tables for $50. The cost to manufacture an unfinished table is 35, computed as follows. So this is the cost disintegration. जो आपका direct material है, it is $15, direct labor is 10, variable manufacturing overhead is 6, and fixed MOH is 4. So the manufacturing cost per unit is 35. Woodmasters currently has unused productive capacity that is expected to continue indefinitely. Some of this capacity could be used to finish the tables and sell them at 60 per unit. For a finished table, direct material will increase $2 and direct labor costs will increase $4. And variable MOH will increase by 2.4, 60% of the direct labor. No increase is anticipated in fixed manufacturing overhead. Should the company sell the unfinished tables or should it process them further? The incremental analysis on a per unit basis is as follows. What they have done, this is the cost details for an unfinished table, which you can sell for $50 and the total cost will be $35 per unit. And if you finish the product, you can sell it for $60 as per the information given here, and but it will be accompanied by increase in the manufacturing cost per unit as well. So now we look at the incremental analysis using the sell unfinished section and process further section. So when you sell unfinished, sales per unit is 55 and cost you already have here. So you get a profit of net income of $15 per unit. If you process the table further and finish it and then sell it, so then you can sell it for $60, but the total cost will be $43.40. So when you sell unfinished, the net income is $15, and if you process further and then sell, the net income will be $16.60. It would be advantageous for Woodmasters to process the tables further. The incremental revenue of 10 from the additional processing is 1.6 higher than the incremental processing cost of 8.4. So what you do, as I had told you, process further as long as the incremental revenue from such processing exceeds the incremental processing cost. So when we look at this example of this unfinished table, the incremental revenue is will be $10, but the incremental cost will be $8.40. So as long as the incremental revenue exceeds the incremental cost, you should process further and then sell. Now we look at the multiple product case. Sell or process further decisions are particularly applicable to production processes that produce multiple products simultaneously. In many industries, a number of end products are produced from a single raw material and a common production process. These multiple end products are commonly referred to as joint products. जो आपकी oil refinement है, that is a very good example of using one raw material to extract many end products. For example, in the meat packing industry, armor processes a cow to produce meat, internal organs, hides, bones, and fat. In the petroleum industry, uh, Exxon Mobil की हम example लेते हैं, it refines crude oil to produce gasoline, lubricating oil, kerosene, etc. So what is being done is one raw material is being entered into the process as input, and from that one input you get multiple outputs. Illustration 2010 presents a joint production product situation for Maris's Creamery involving a decision to sell or process further cream and skim milk. So as I've told you about this joint product, उसमें होता क्या है कि when you put in the raw material which is milk in this case, so आपका एक common process होता है जिसमें तमाम आपके जो products होते हैं वो उन पे processing होती है, that is called the joint cost. और जिस point पे जाके वो आपके separate हो जाते हैं products, that is called the split off point. So when you put in raw material, usko through common process, you divide it into cream and skim milk. Up now the question is, okay, once you have got cream, should you process it further and then sell, or you sell it at this stage? So if you process the cream further, you can get cottage cheese from it, and this cottage cheese you can sell. Same as with milk, if you process it further, you can get condensed milk and then you can sell it. So many costs prior to the manufacture of cream and skim milk, all costs incurred prior to the point at which the two products are separately identifiable, it's called the split off point, which is here. एंड ये जितनी कॉस्ट होती हैं दीज आर कॉल्ड जॉइंट कॉस्ट. ये कॉस्ट जो होती हैं ये आपको बेसिकली इट इज हार्ड टू फिगर आउट कि ये किस प्रोडक्ट से रिलेटेड कितनी कॉस्ट होगी. For purposes of determining the cost of each product, joint product cost must be allocated to the individual products. This is frequently done based on the relative sales value of the joint product. So what you do, since there is no concise method which can be used to differentiate this cost, we look at the relative sales value of joint products. While this allocation is important for determination of product cost, it is irrelevant for any sell or process further decisions. The reason is that these joint product costs are sunk costs. So as we had discussed in lecture 21, जो आपकी sunk cost होती हैं, that is never a relevant cost because this cost cannot be recovered. And since it has already been incurred, so it should not affect your decision. The reason is that these joint product costs are sunk costs. That is, they have already been incurred and they cannot be changed or avoided. So illustration 2011 provides the daily cost and revenue data for creamery related to cream and cottage cheese. जो आपकी cost and revenue data per day for cream है, joint cost थी cream की that is $9,000 और cost to process cream into cottage cheese is 10,000. Your revenue from products per day hai, you can get 19,000 from cream and 27,000 if you process cream further and convert it into cottage cheese as shown in this diagram. From this information, we can determine whether the company should simply sell the cream or process it further into cottage cheese. ये आपको एग्जांपल देगा. जो सेल्स पर डे है आपकी 19,000 है for cream एंड 27,000 है फॉर कॉटेज चीज। जो कॉस्ट पर डे टू प्रोसेस क्रीम इनटू कॉटेज चीज आपकी नील है। व्हाई? क्योंकि उसमें जो है ऑलरेडी दैट इज sunk cost, so we will not consider the sunk cost when we are doing the incremental analysis. If you process it further, so जो आपकी एडिशनल कॉस्ट आती है वो आती है 10,000। तो आपका sell as cream you get 19,000, and if you process further and then you sell it, you get net income of 17,000. From this analysis, we can see that Mars should not process the cream further because it will sustain an incremental loss of 2,000. Shows the necessary. Note that the joint cost that is allocated to the cream is not included in this decision. It is not relevant to the decision because it is a sunk cost. That is why यहाँ पे जो cost per day to process cream into cottage cheese था, वो if you sell it as cream, that is zero. उसकी वजह है कि that is considered a sunk cost. So same way if you look at the cost for skim milk, तो हम देखते हैं कि अगर आप milk को as skim milk sell करें, so you get a net income of 11,000. If you process it further and you sell it as condensed milk, you get a profit of 18,000. So using incremental analysis, you can get additional income of $7,000. Again, note that the 5,000 of joint costs allocated to skim milk is irrelevant in deciding whether to sell or process further. That is why, again, it is zero here. Repair, retain, or replace equipment. Management often has to decide whether to continue using an asset, repair, or replace it. For example, Delta Airlines must decide whether to replace old jets with new, more fuel efficient ones. To illustrate, assume that Jeff Coat Company has a factory machine that originally cost $1 lakh, uski original cost थी $1,10,000. It has a balance in accumulated depreciation of 70,000. So its book value is $40,000. It has a remaining useful life of 4 years. The company is considering replacing this machine with a new machine. A new machine is available that cost $120,000. This is the cost for the new machine. It is expected to have zero salvage value at the end of its 4 year useful life. If the new machine is acquired, variable manufacturing costs are expected to decrease from 160,000 to 125,000 annually, and the old unit could be sold for 5,000. So now when we look at this scenario, which costs should we consider when we're doing the incremental analysis? Now you have to keep in mind the concept of sunk cost. If we retain the equipment, using when we look at this line, the variable manufacturing costs are expected to decrease from 160,000 to 125,000. So we can figure out that the variable manufacturing cost related to the equipment which we are currently using is $640,000, क्योंकि it is $160,000 per year, 4 साल उसकी टोटल अभी वैल्यू रहती है, so it will be $640,000. If we replace the equipment, so our variable manufacturing cost will come to $500,000 because there will be a reduction from 160 to $125,000 annually, and the new machine will cost you $120,000. And if you sell the old machine and go for the new one, you will have to take care of this 5,000 as well. That is why this 5,000 will come in this incremental analysis, because this amount becomes a part of this analysis. The existing book value of the machine that we are currently using does not become a part of incremental analysis because that cost has already been incurred. So we will not look at it. So when we put this data into incremental analysis, हम देखते हैं कि net income जो होगी वो आपकी होगी $25,000 की if you buy that new machine. In this case, it would be the company's advantage to replace the equipment. The lower variable management cost due to replacement more than offset the cost of the new equipment, जो we know it was $120,000, तो वो उसको offset करेगा. because it will only be received if the company chooses to replace its equipment. That is why 5000 की वो cost जो है वो we will include in this incremental analysis. In general, any trade in allowance or cash disposal value of existing assets is relevant to the decision to retain or replace equipment. One other point should be mentioned regarding Jeff Coates' decision. The book value of the old machine does not affect the decision. Book value is a sunk cost, as I've already told you, which is a cost that cannot be changed by any present or future decision. Sunk costs are not relevant in incremental analysis. In this example, if the asset is retained, book value will be depreciated over its remaining useful life, as I've told you. That is why sunk costs are not included when we are doing the incremental analysis. Sometimes decisions regarding whether to replace equipment are clouded by behavioral decision making errors. For example, suppose a manager spent 90,000 repairing a machine 2 months ago. Now, suppose that the machine breaks down again today. The manager might be inclined to think that because the company recently spent a large amount of money to repair the machine should now be repaired rather than replaced. However, the amount spent in the past to repair the machine is irrelevant to the current decision. Why? Because it is a sunk cost. Eliminate an unprofitable segment or product. Management sometimes must decide whether to eliminate an unprofitable business segment or product. For example, in recent years, many airlines quit servicing certain cities or cut back on the number of flights. Goodyear quit uh, producing several brands in the low end tire market. Again, the key to focus on relevant costs. So, whenever you're doing whenever you're making any decision related to incremental analysis, you should focus on the relevant cost, the data that can change under the alternative courses of action. To illustrate, assume that Venus Company manufactures tennis rackets in three models: Pro, Master, and Champ. Pro and Master profitable lines, Champ highlighted in red, which is here, operates at a loss. Condensed income statement data are as follows. Now it shows ये जो company है, it is into the manufacture of three racket types. आप देखेंगे जो Pro है, it gives you a net income of $2 lakh. Master gives you an income of 40,000, while Champ incurs a loss of $20,000. और जो आपका total profit होता है, वो होता है $220,000 when you manufacture these three types of rackets. You might think that the net income will increase by 20,000 to $240,000 if the unprofitable champ line of rackets is eliminated. However, net income may actually decrease if champ line is discontinued. Why? The reason is that the fixed costs allocated to the champ rackets will have to be absorbed by the other products. When you look at this, आप देखेंगे इसमें जो आपकी fixed cost है of 30,000. Fixed cost is a cost that you incur no matter how many units you produce. So even if you stop producing champ, you will still incur this fixed cost. So now we look at the incremental analysis um, point of view chart. We say that if we stop making the champ model, what will be the net income then? Since जो आपका fixed cost थी of 30,000 वो अब आपके बाकी दो में absorb होगी, तो what we do, हम कहते हैं assume that the 30,000 of fixed cost applicable to the unprofitable segment are allocated 2-3 to the pro model. तो अब जो pro model की fixed cost थी, it was 80,000, आपने 30,000 का 2/3 pro को दिया, so it comes to 100,000. आपने 1/3 मास्टर को दिया, फिक्स कॉस्ट एब्जॉर्ब की, it increases to 60,000. Now your total income is 210,000. So it is better that you use that you manufacture champ line as well, because when you manufacture champ, you will end up earning more than if you stop making the champ brand. Total net income has decreased 10,000. The result is also obtained in the following incremental analysis of the champ rackets. ये इन्होंने इसकी यू विल सी इन्होंने इसकी वो की हुई है। जो इन्होंने सेल्स थी आपकी, सेल्स आपकी कंटिन्यू में कितनी थी? इफ यू कंटिन्यू विद दी प्रोडक्शन ऑफ जैम, तो इसकी सेल्स थी $1 लाख की, वो आपकी सेल्स आ गई इधर। आपकी वेरिएबल कॉस्ट 90,000 की है, कंट्रीब्यूशन मार्जिन 10,000 का था, फिक्स कॉस्ट 30,000 की, और नेट इनकम 20,000 की थी एज पर द डेटा हियर। इफ वी एलिमिनेट, तो सेल्स तो आपकी स्ट्रेट अवे जीरो होंगी, वेरिएबल कॉस्ट भी। जो एक चीज आपकी जीरो नहीं हो रही है, वो आपकी हो रही है फिक्स कॉस्ट। जब आप इसको फिक्स कॉस्ट करेंगे तो आप देखेंगे इसका 8,000 का आपको लॉस आता है। सो जो नेट इनकम में है, यू विल गेट अ लॉस ऑफ $12,000. In the case, because the company is able to eliminate some of its fixed costs by eliminating the division, it can increase its net income by 12,000. This occurs because 22,000 savings that result from eliminated fixed costs exceeds the 10,000 in loss contribution margin by $12,000. In deciding on the future state of an unprofitable segment, management should consider the effect of elimination on related product lines. It may be possible for continuing product lines to obtain some or all of the costs, all of the sales lost by the discontinued product line. Other considerations in decision making. Qualitative factors, हमने when we started in lecture 21, हमने कहा पढ़ा था कि we will only look at the quantitative factors. By quantitative I mean financial factors when we are doing the incremental analysis, but non-financial factors are also very important. Consider, for example, the potential effects of make or buy decision, or of the decision to eliminate a line of business on existing employees in community in which the plant is located. Now, this is, a qualitative factor which should be considered. The cost savings that may be obtained from outsourcing or from eliminating a plant should be weighted against these qualitative attributes. For example, would be the cost of the lost morale that might result. If you remember, we did ABC activity-based costing in chapter 17. We noted that many companies have shifted to ABC to allocate overhead cost to products. The primary reason for using ABC is that it results in a more accurate allocation of overhead. The concepts presented in this chapter are completely consistent with the use of activity-based costing. In fact, activity-based costing will result in better identification of relevant costs and therefore better incremental analysis. So this is the end of incremental analysis.